Hello, this is Corner Invest. Today I'll be talking about the market capitulating. So in today's video, I'll be covering mainly three things over here. So number one, it'll be the market sell-off as well as the VIX. Number two, it'll be why Trump is tariffing. And number three, it'll be on the topic of long-term investing. So over here, yesterday we had an absolute bloodbath. So Apple was down 9%, Nvidia was down around 8%, Amazon, Meta all down 8-9% as well. And then you have Google down 4% as well, although they were not really impacted by all your tariffs. You had all your different banks as well, down 7, 8, 9%, and so on. And yeah, overall, it was just an absolute bloodbath yesterday. And over here, the S&P 500 is officially in correction territory. We're down around 13% from all-time highs. Same for the Nasdaq, we're down around 17%. We are closer to a bear market than we are from a correction territory already. So we could definitely see a lot more downside in this. Nobody knows, but yeah, let's just see how it plays out. So we have fear in the markets today. We're currently in extreme fear, and the greed and fear index is around 8. So it closed at around 7, and usually when it hovers around 7 to 8, that is when you want to start buying your stocks. So this is the VIX level as well. So the VIX is currently at around 30, and 30 is usually where you bottom. So in 2022, over here, this whole stretch over here, we had the VIX going to 30, 30. All those periods were good buying opportunities for you to buy into the market. Same for 2020 as well, when we had a COVID crash. The COVID crash, we had this sudden spike up to nearly 40, and then after that, it was just a bull run to end the year off. We were up 16% in 2020 as well. So for this year, in 2025, the VIX is currently at 30. Of course, there could be a lot more downside to go, but it is a good buying opportunity if you're looking at your stocks and holding them long term. So just zoom out, and over here, every single decade, every single year, there's always been a problem. So back in 1880s, all the way until now, back in 2020 as well, 2022, we've always had a problem, a recessionary scare or pandemic or a crash and so on every single year. And if you were to just buy your stocks at all those different times, you will have looked like a genius now. So imagine if you bought the stocks in the dot-com crisis, you're a genius now. If you bought the stocks in the financial crisis, you're a genius as well. Imagine if you bought stocks during the COVID crisis, same thing, you'll be a genius as well. So for all your different stocks, just buy them, hold them long term. Every time there's a market sell-off, it is a good buying opportunity because it increases your overall returns in the future. Because cheaper stocks now will increase your future returns, and more expensive stocks will decrease your future expected returns. So these are the stocks that I bought so far. I bought Amazon. Amazon crashed around 10% yesterday. ASML as well. Microsoft is not going on an extremely deep discount yet because it is a highly durable business, but hopefully it sells off a bit more, maybe another 10%. That would be a good time for me to buy into Microsoft as well. And then Google is extremely discounted right now. So my cash position right now is around 43%, and I deployed around 10% or so in the past month already, and I'm hoping to deploy more in the future as we continue this sell-off. Yeah, I'm hoping for another 20-30% crash, but of course, that may not come. So I'm trying to add to my equity positions whenever the stock becomes undervalued and not care so much about the macro conditions. So these are the tariffs that were imposed by Trump. Trump imposed around 34% tariffs on China, 20% on EU, 46% on Vietnam, which will hurt Nike as well. That's why Nike was down around 12% yesterday. And then Taiwan and so on and so forth. So this actually led to all your different Max 7 stocks and your general broad market sell-off as well. So this is what the economy is made up of. So your economy is mainly made up of 4 different components. You have your consumer spending, your government spending, your investments, as well as your net exports. So why exactly is Trump doing this? Trump is doing this so that he can bring investments back into the country. So whenever you bring investments back into the country, it will help with your GDP growth, because the US, the GDP is suffering right now. The GDP growth is slowing down already. So my thesis is that Trump is doing this so that he can bring in all the investments from overseas back into the United States. So for example, over here, he had TSMC invest a lot of money into the US to start up all the fabs in the US, and that is what he wants to do to try and save the GDP. So the other component is consumer spending. So when you have more investments coming from overseas, it creates more jobs. And when more jobs come in, then people have more money leading to more spending as well. So this also helps with the GDP in general. And over here, the job openings hasn't been dropping a lot, which supports this argument as well, that Trump is trying to bring in all the investments so that he can support the jobs market. Next portion, he is trying to increase exports to all your different other countries by strengthening other countries' currencies and by weakening his own currency. So over here is the 10-year yield. The 10-year yield has been tanking ever since Trump came into office. So we were at around 4.8% at one point, and now we're at around 3.9%. So when the yield drops, your currency, your US currency will also drop at the same time, and that allows US to have more exports, leading to more GDP growth as well. As for the effects of his actions, overall, this will lead to more stock market pain for sure, and his popularity will drop. That is because whenever you have all this tariffs, whenever you have all this uncertainty, the stock market will follow as well, and the stock market basically follows on uncertainty. So whenever there is no deal, whenever there is no tariff agreements between all these different countries, you can see the stock market dropping and dropping even more. But over the long term, this is actually good for his country if this GDP thesis plays out. So for me, I think Trump is a deal maker. He wants to make deals. He's super fast on his deals. He makes fair deals. And if these countries they come up with a resolution with him, I think this problem can be solved very quickly. But of course, it all depends on the responses of all your different other countries. If all these different other countries they come together and then they start tariffing back on the US again, then that could be that could be a problem that could lead to a global recession. Basically, what Trump is doing right now is he's risking a recession for GDP growth. And so if all these different countries they come together and then they fight the US, that could be a problem. But I don't expect them to do so because it's sort of like a mutually assured destruction at that point. So I do expect him to make deals with countries, but the deals will take a while. It won't be in a week's time or in a month's time, maybe a few months from now, and that's why I still see pain ahead for the stock market. But for me, I've been buying. I'm not planning to sell any of my positions. I'm not planning to basically sell any of the positions and any of the stocks that I bought previously. I'm looking to add to all my different stocks, all the different positions that I have as the prices come down, as the stock market continually sells off. As for long-term investing, just zoom out. So every time there was a dip, it's a good time for you to buy. So 2020, for example, 2022, 2018, when we had the tariff war as well, and then back in 08, back in the dot-com crisis, every single time when you bought in those periods, you have seemed like a genius. So it's similar to what we're seeing right now. We're currently down around 12% from all-time highs. We could go to around 20-30% down from all-time highs, but it doesn't really matter. Just buy on the way down, buy and hold it long term, and usually, as Warren Buffett says, in 5-10 years time the stock market will go up. So don't be sad when stocks go down, don't be happy when stocks go up. It's all about temperament. Basically what it means is try and control your emotions. Don't get emotional when it comes to investing. It shouldn't be emotional. Just buy when you see opportunities, buy when stocks are trading undervalued, and just buy on the way down. Doesn't really matter how long it takes for the recovery to happen, but usually the recovery will happen unless you have a depression like back in the Great Depression period where we had 10 years of basically no returns. But overall, with QE and the FDIC present, I don't expect there to be any sort of depression in the near future because the government can just print a lot of money and just distribute it out.